What's up, traders? My name is Layla, and welcome back to this week's no-nonsense stock market recap from streetfox. What a week on Wall Street. The market spent most of it bouncing between AI is the future and wait, what's happening in the Middle East now? Yet somehow, despite all the headline chaos, stocks kept finding ways to move higher. Monday kicked things off with a solid start as investors balanced AI excitement with geopolitical nerves. The biggest star once again was Nvidia, which unveiled its RTX Spark AI PC chip and immediately reminded everyone that it still owns a concerning amount of Wall Street's attention span. Nvidia's announcement helped lift both its own shares and Microsoft, while ARM, Dell, and HP happily rode the AI wave right behind it. Meanwhile, Intel and AMD got front row seats to yet another episode of the Nvidia show. At this point, if a company can spell AI correctly, investors at least want to hear the pitch. Outside of tech, IBM got a boost after receiving a bullish analyst upgrade. Berkshire Hathaway made headlines with its $8.5 billion acquisition of Taylor Morrison, and McDonald's unveiled its new McDonald's Next strategy because apparently even cheeseburgers need a long-term innovation roadblock. Tuesday kept the momentum alive as stronger than expected job openings reinforced the idea that the economy remains surprisingly resilient. AI stayed firmly in the spotlight. Marvell rallied after Nvidia CEO Jensen Huang practically gave it a public cosign by calling it a potential trillion-dollar company, while CoreWeave continued climbing as investors doubled down on the AI infrastructure trade. Elsewhere, Victoria's Secret delivered strong earnings and surged to a record high. Dollar General surprised investors with better than expected results, and Tesla continued battling margin pressure and growing competition. Bitcoin, on the other hand, had a rough day. ETF outflows accelerated, investors headed for the exits, and crypto once again reminded everyone that it can go from digital gold to digital headache in record time. By Wednesday, the market finally looked like it needed a coffee break. Stocks pulled back modestly as investors balanced record high optimism with ongoing US-Iran tensions. Nvidia Semiconductors jumped more than 20% after catching some Nvidia-related enthusiasm, while Microsoft slipped despite continuing to make major moves in cloud computing and AI. Uber announced a sizable workforce reduction. Disney found itself back in the headlines after governance discussions, and Macy's delivered its strongest sales growth in 4 years. Honestly, Macy's quietly becoming one of the better retail stores of 2026 was probably not on many investors' bingo cards. Meanwhile, OpenAI CEO Sam Altman spent time in Washington reminding lawmakers that AI is moving at approximately 1,000 miles per hour, where regulation is still trying to find the car keys. Then Thursday showed up and immediately caused chaos. The Dow pushed to another record high, while the NASDAQ cooled off as investors rotated out of semiconductors and into banks, retailers, and other parts of the market. Broadcom plunged more than 15% after disappointing AI chip guidance, dragging down parts of the semiconductor sector and serving as a useful reminder that AI stocks do occasionally go down. Wall Street had almost forgotten. SpaceX's upcoming IPO became one of the hottest topics of the day, with speculation growing around Elon Musk potentially becoming the world's first trillionaire. Whether that actually happens or not, the fact that investors are even debating it tells you a lot about the current market environment. At the same time, Supabase raised $500 million at a $10.5 billion valuation. Pinterest announced a $4 billion AWS cloud deal to expand its AI capabilities, and Blackstone capped withdrawals from one of its private credit funds after redemption requests spiked. Surprisingly, investors largely shrugged that news off. Right now, this market has the energy of someone reading warning labels and saying, yeah, but it'll probably be fine. Underneath all the headline-grabbing stories, treasury yields move lower, oil prices eased, and several stocks, including Humana, CrowdStrike, Five Below, and Petco, saw significant moves based on earnings and guidance. Bitcoin continued struggling throughout the week, adding to what has been a frustrating stretch for crypto wolves who are currently checking charts every 5 minutes and pretending they're not. By the end of the week, the message from the markets was pretty clear. AI remains the favorite child, but investors are becoming more selective about who gets rewarded. Strong earnings still matter, guidance matters even more, and geopolitical headlines are always lurking nearby, ready to crash the party at the worst possible moment. Looking ahead, traders are moving into another catalyst-packed week featuring jobs data, earnings reports, inflation updates, and fresh geopolitical developments. In other words, keep the seatbelt fastened. Wall Street doesn't look like it's planning to become predictable anytime soon. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to StreetFox for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.